order. Take a roll call here. Joe Shirley? Here. Lee Love? Here. Chris Olson here. We're able to conduct business then on this particular day. We're going to read the minutes or look at the minutes of the last meeting. Would you like me to read those? Well, these people don't have it, but you gotta look this over right quick and see if it's correct.
Move we approve.
Motion to move and approve the minutes previous meeting of June the 15th. All in favor of approving those minutes? Aye.
Aye.
Aye. Motion carried then. Sign this. Okay, now we have possible discussion action regarding the following hearing for the formal appeal to the Equalization Board from Williams Midstream Gas Services LLC. So I guess we're ready to begin. Which one of you guys want to go first?
Go ahead.
I'll start, yeah.
Okay.
Thank you all again for meeting with us. Good to meet you all in person rather than over the phone. So I know we discussed this a bit last week. This is for the Williams Midstream Gas Services. They had this acquisition from the Williams Group, different pipeline segments, and specifically, obviously, we're talking about the Woods County. The big thing that we discussed, Ben and I, that we kind of went through was the PSA. I believe not having the signed PSA was kind of the concern, so we wanted to make sure that we provided you guys with that. So you now have the fully executed PSA showing you the sign, so it's fully completed, fully executed. Effective date 1/1/2026. Really, and I get this is on schedule as far as the cost schedule. The big thing here is our client had this PSA arm's length transaction, and so essentially all we're asking for is the purchase price, essentially an allocation to get to the number that we rendered. Our rendered market value was around $13 million. I believe currently we're sitting around $73 million for the market value. Again, we just want some consideration for, obviously, a big part of this is the right-of-ways, and you can see in the PSA, of the 500 pages, there's a couple hundred pages that really assigns to the right-of-ways. So, I believe there probably is quite a bit of value in the right-of-ways that was taken in. However, it's not taxable, it's intangible, but it was all included in the $57 million of this purchase price. And so essentially, again, what we're asking is to basically consider this purchase price. The full amount was $57 million, and then take out a percentage for the right-of-ways. And that's kind of essentially how we get down to our number that we've requested as far as our market value.
Okay, do I understand you're thinking that the right-of-way is not a part of your pipeline purchase?
It is part of the pipeline purchase.
But you're saying it's intangible?
Correct, it's not taxable.
So you don't consider that as a clause for protecting your pipeline? I mean, you've got an easement, whether it's 20 or 30 foot here, and you actually have ownership of that space, right? Do you consider that to be real estate? Or do you say it's just I mean, what's your theory as to why it's not a part of the pipeline?
Well, I guess maybe the theory would be that for property tax purposes, we're just taxing the pipe. So that's kind of what's considered. Again, with the whole allocation or the whole acquisition, everything was taken in together. So of what's actually truly taxable for property tax purposes, that's what we're trying to carve out as far as we want to make sure we're getting a fair market value for the actual pipe and the assets themselves.
But you don't consider the protection of that pipe being a part of it? I mean, the easement isn't protection of your pipe.
Yes, sir.
I mean, that's like saying county government, the fire department and the law enforcement is not a part of it. because we don't need them every day. Only when we, have an emergency do we need those people, so, but we still fund them, and they're part of county government. So how do you, I don't understand how you, can separate the protection of your pipe from the pipe itself.
And I guess it just goes, again, I'm thinking more just property tax purposes, you have tangible and intangible.
Yeah.
So the intangible would be such contracts, those won't essentially be taxed for property tax purposes only. For property tax, we're only looking at these assets.
But did you consider the real estate part? Because once you have an easement, isn't that a permanent record on the real estate? Are you taxed on that? You pay taxes on your real estate for 20, 30 foot?
You do pay taxes on the real
No,
estate.
do you?
Do I?
Yeah, there's a pipeline.
For the real estate?
Yeah. Your easement is a record on the county clerk's record, and it's there forever, till it's abandoned or whatever. So do you, if you're saying, well, it's not a tangible part, it is a real estate part then. You can't have it both ways. I mean, if you have a lease and you drill a well, and you want to go from that wellhead to a pipeline somewhere, and the landowner says, "No, I'm not giving you an easement." How do you get your gas from the center of the section out to the end of your 640 spacing? That's what it is. How do you do that?
I'm not.
Well, I can
Can't
tell
speak
you.
to that, so.
You lay it under the lease, because the lease gives you the ability to collect, get your gas where you want to go. But it only goes to the extent of that property that the lease covers. But you have no, if you lay a pipeline under the lease, you have no protection. But if you have an easement, then you've got protection of that 20 or 30 feet, all the way down to a couple of feet below the pipe. You own that space. You understand?
Yes, sir. And I'm not saying there's no value in the easements. I'm saying there is. It's just for property tax purposes, we're only taxing.
Okay, I just want to make sure you understood that an easement is a protection of your pipe.
Yes, sir.
Okay. Any questions? You got it. Okay, go ahead. Anything else? I just want to make that clear.
Yes, sir.
What he's trying to do there.
Understood.
You looking for me to throw you a life?
Not at all. No, sir. No, sir. No, sir.
I'm Jerry Wisdom, Total Set. I was reviewing this, I'll talk about this first. This purchase and sales agreement that they provided. They've got, it does look like, we had some question about whether the sale was after the first year, but according to this document, it was effective 1/1/26. So initially, when we seen in the 10K information that it was in March, so it wasn't really after the sale, so that kind of wiped that part over here. I don't see any portion in here the way the allocation is going to be performed in the deal. We have a settlement statement that's discussed, but when we get in talking about the purchase price allocation, he's wanting to say that the allocation, and what are you claiming then the value of the right-of-way is for the board?
I guess that's a great, of
course it's a great question.
Weighted allocation, yes, sir. Weighted allocation based on previous assessments is kind of how we came to our value for the pipe that we rendered, the assets that we rendered.
Previous assessments of the right-of-way?
Previous, I believe just in general, kind of, my understanding is that, most of the time you're getting 30 to 40% for easements.
Okay. So your claim is 30 or 40%. I thought something last week was said 50/50 or?
50/50 is what it was
Is
last
what
week.
you were
It's
talking
28.5 is what you had said was.
So we don't know what the allocation of the buyer presented. It looks like that the seller is not going to take any position whatsoever on the allocation, and they can allocate it however they like. Just in the brief matters that I've seen here. Settlement statement portions on page 7. They're gonna have to fill out IRS Form 8594, but they're not gonna have to fill that out until next year. IRS 8594 is the income tax deduction where they attribute so much value to the pipeline, personal property. Then they'll attribute that to the value, so we don't know what they're going to attribute. So I'm gonna let Ben talk about this other. We have had, just for the board's understanding, we have had some negotiations yesterday trying to reach an agreement on this particular part, and we'll get into it in just a second with Ben's deal. We believe that the 57 million probably was an arm's length transaction for the full thing, so we believe that the property should be divided by the 57 million by the counties. Now, there's 8 counties, I think, in Oklahoma and 1 in Texas. So,
2 in Texas.
oh, 2 to
Yes,
Texas.
sir. Yes, sir.
Enfield and Wheeler.
Handle and Wheeler, yes, sir.
Okay. So I'll let Ben go ahead and present what he's got, and then I'll kind of spread my wisdom throughout it.
Yeah. That'd be good.
Yeah,
I think this is 4 copies, right here, 1 for each board member and clerk. I didn't have enough copies, guys, for everybody.
Oh, no, right here.
Just so you can share.
do you need some money?
I don't think so.
Before we move a little bit further here, how did you divide the properties throughout the 8 counties in Oklahoma? What process did you use?
So we used the weighted allocation, and then from there, just essentially based on prior year's assessments, kind of weighted that out by that value. So obviously, the bigger portion is Woods County, which, that's where most of the value is, and then kind of went down as far as like how they were tiered out as far as where the value was in each county.
Okay, was that in consideration of the footage of pipe?
Correct, yes,
All
sir.
of that type thing?
We used the replacement cost new on our side as well. We used that same replacement cost new, and then we just allocated our percentages down. Correct, yes, sir.
Go ahead.
Okay, again, my name's Ben Hunley, I work for Total Assessments, and so glad to be back. In front of you, I got a little package. There was a couple of issues that I think the parties were unclear of. I think one of the questions that came up was there any production assets in deal this? Because we had looked and there was a number of meters and all that stuff. My research says that there isn't any production. Those meters are the sales meters, probably at the locations, and that belongs to the midstream company, the sales meter. So when we saw a number of meters in the different school districts, that's probably the number of locations that are feeding into this gathering system. And I couldn't find anywhere that indicated that they had any production. It's just simply a gathering system.
Correct, no production. That is correct.
So, I think you didn't have a good idea either, so that was one of the questions that came up. So we did that research. I also went back and looked at the 10K again, and again, they talked about, some assets being held for sale. And then I dug a little further after the meeting, and the first page of page 2 of my exhibits here is the Form 10Q that they file on a quarterly basis. And that's for the Williams companies. Turn the page to page 3, and I've got it highlighted for you, the non-occurring fair value measurements. In December 2025, Williams Management approved a plan to sell certain gas gathering assets in the Mid-Continent region. These operations were designated as held for sale at December 31, 2025. Accordingly, the disposal group, inclusive of intangible assets minus net, was measured at fair value using the expected sales price upon a third-party contract, resulting in a fourth quarter 2025 impairment charge. So Williams impaired the assets $176 million within the West segment. Using these inputs, the fair value of the disposal group was measured at $48 million and classified within level 2 of the fair value hierarchy. I'm not sure what all that means, but Jerry will help us out here in a little bit. The estimated fair value of the property, plant, and equipment minus net and intangible assets minus net were determined using a market approach incorporating indications of interest from third parties. This disposal group was sold in the first quarter of 2026, so that's the information that I had. And then the next page kind of tells you about the same thing, is in the first quarter of 2026, William closed on the sale of certain gas gathering assets in the Mid-Continent region. And they were designated for sale in December 31st, 2025, and that they took an impairment. The final page in my supplement packet that I handed out is just we did an allocation based on the assets, based on the purchase price, not giving any consideration to the intangible assets. We kind of disagreed that 50% was a fair number. We don't think that's fair, and then now they're negotiating, and I'll let them do that. But that's what this chart was based on. And as you can see, I took the total $57 million and did an allocation based on county values that we had previously for these counties. In Wood County, I highlighted it. We were at 74, 461, 958. I know that we talked about a 73 number that was in my last packet. There were some assets that were not known to the buyer, I guess, maybe, or something. Anyway, we got it from Williams, and we're trying to get all that asset list straight, and that's why you see a little bit of difference. But anyway, the allocation for Woods County, based on the $57 million sale price, would be $35,346,699. And so that's kind of what we came up with as a new value until they started negotiating, and I'll let Jerry take it from here.
If you look at page 6 of the purchase and sales agreement that they had, and you can kind of side by side look at Ben's exhibit on page 3. You know, Ben's had a $48,176 million number, and you're saying, well, we have a purchase price of $57 million. So this explains it here on page 6. The purchase price of the equity interest was $57 million. Then they had $48 million in cash, and they had an earnout of $9 million. Probably the $9 million was for the income from January 1 to the actual closing date of March 26. So if you add those two together, it comes up to $57 million, more than likely. We see that in some of these sales. You'll see that the value of this asset on Ben's page last year was $120 million. Actually, they had some MLP assets and other assets in the county that they sold to somebody else that Williams did, not part of it. So when it comes down to it, we were discussing yesterday, and is it okay if I discuss that deal, because it is settlement deal? I want to make sure before we start throwing a bunch of numbers out.
Yes, sir. Understood.
So they come back to us, and they had two requests at our offer that we made originally. One was we had some Texas assets that's actually over in Hempfield County, and the other, and they asked us to consider $5 million for those assets for the value. You said that they was actually on the books for $16 million. So Ben did check yesterday, and they are still on there. They haven't settled those. So they're kind of in the same quandary as we are, $120 million from last year down to, whatever the values are this year, $74 million. Or $74 million for the county, $120 for the total assets. So we had no problem with accepting the $5 million, so that made the actually allocation down to $52 million. Where we got hung up is they wanted 20% for the right-of-way. And I came back saying, well, the right-of-way, kind of like you said, Chris, you can't have a pipeline without a right-of-way. And really all of the valuation that we're having is for the pipe. So if we looked at, if we were going to salvage this system, we got 1,200 miles of pipe, the salvage value may come out more than the actual $57 million. I don't know, I haven't run the numbers. So I was kind of, they'll say, no, we'll just do the allocation. What we want to do is we'll set that value to remain at the sales price for 3 years until we can get an income analysis on how they operate. So on the third year, we would be able to look at the income analysis and see how the property is performing. The sales, when we have a market sale like we have this, it takes in all forms of appreciation, physical, functional, and economic. So we're not disputing that 57 million. I think that any judge would look at that and probably say, okay, well, it may have been some related party because these guys that own this actually worked for Williams, several years ago or whatever. I don't think that's the case. I think that we see a lot of this in the area writing down the assets in today's world. So we came back and we offered them a 10% just to meet the middle. And they got all bullheaded and wouldn't listen to us. I just teased a little bit. So I got just a couple of pages right there, just passed down there. I wanted to show the board the numbers. I'm sorry I didn't make more copies, but I have 3 different scenarios here. And there's a map of the assets right there on page 2. So on page and Exhibit 6 gives you a list of all of the others and the purchase price. Okay, page 8. So this is the kind of like the page that Ben had. This is taking the $5 million out, which we agree they should be doing. Oh, what if they, I don't know, are they the same ones? I don't think they're the same. They don't have numbers. So it would show that the value for Woods County would be $32,246,111. And that's not allocating anything for right-of-way. A lot of the companies will allocate everything to the hard assets because they can depreciate those assets. Right-of-way, they can't depreciate. So I wouldn't know until next year until they actually did the right-of-way. They can't because it's interest in land, kind of like you were getting, Chris.
So do you consider the easement as a purchase of the land for a period of time?
No,
And then tax it?
No, I just consider that they have the right to use that land for the right-of-way purposes. And I don't believe it has as much value as they say, but a lot of the companies hold that because they may want to run fiber optics or something else at some point in that right-of-way, and there's some magical, number somewhere down the road. So if we look over here on page, so it's 32 minutes. So you look at page 9, which is actually 10%. So this is the number that we offered them, not to make those guys get up at 3 in the morning and drive all the way up here and for you guys to come. It makes the value at $29,021,500. And then lastly, if you look on the back page, the 20% number makes the county's value $25,796,889. I would like to recommend to the board to set the value at the $29,021,500, the 10% for the right-of-way interest and the value for this year, saying that, that's kind of what we offered them yesterday. We kind of let them take it back on, chew on it a little bit longer between the two. It's only about $4 million difference between the two, and I feel like that's fair, considering the amount that the county has lost in value for the county value, but it's certainly certainly $57 million market. I would recommend that they set the value of that, and then what I would have to do is enter it in the computer to get your valuations by school district based upon it. You go back to the allocation a little bit of what we were talking about, Chris. We entered all the values. You can see all the values on our pages that all the counties had for 2026, the market value. So it's a straight percentage. So Woods had 62.01% of the property. So we can agree on that too. So if maybe last year, maybe they said maybe we'll go ahead and do 10% today.
20% was kind of where they were at, and again, that's, they still believe it should be a little bit higher, but, 20%, and again, that would just get it done, and,
So 10.
20%.
Yeah. So the only thing we have here, the only thing is when the board sets a value, we can't raise that value, you know, to anything else. I think that's fair on the 29 million. I think that probably, I'm gonna recommend that to all the other assessors. I'm gonna do that same recommendation so you know
Yes, sir.
what's going on there to keep the 10. And I think that we can do a gentleman's agreement and we can tip this thing up, you know, for this year or so. But I would recommend that the board set the value at 29,021,500.
I'm looking at Ben's first presentation here, where before the sale, when Williams had it, we were looking at 73 million. Then we drop it because of the sale to 57 million.
No, not 57.
Well, that's on Ben's previous. The purchase
But
price was 57.
But that was for all the counties together, that wasn't just Woods County.
Okay, that was all of them?
Yes, sir.
Okay. All right. Okay, so we're going to go down to, you say 29, and that's it?
Yeah, 29,021,500, with the understanding that we are going to get financial records as that they operate the facility, because they're going to be a smaller entity, their expenses aren't going to be as high, you know, they don't have as much overhead, and then we can do that each year. And then next year we keep the same value plus any new property that was added if they added new. So we're going to keep that, kind of keep a range of the sales price, if you will, kind of. That was market.
So the 57 million was the entire purchase?
Yes, sir.
Yes, sir.
For 1,200, 1,300 miles, Chris.
Okay. All the counties in
Oklahoma and
Six,
Texas.
yeah,
Okay.
6
Two in
Oklahoma
Texas,
and
more the
10.
majority of that being in Wheeler, I believe. I
So-
don't think you have much in that other county.
today, you dropped that down, what, to Woods County being a, what, 44?
62.01% of the sales.
Okay,
It's going to be 29,021,500.
on the back page here. Yeah, okay.
Yeah, page 9.
So, okay.
So you're wanting it to take off 20%, not 10, right?
No, they are, we're just taking, we're allocating 10% just for good faith to have some sort of valuation for the, you know, for the right of way.
Yeah, without that right away, they can't even go in and repair.
Yeah, but the value, I mean, but.
Value is what?
The value is what the other stuff is, they're not going to repair, they're just going to hold the easement, you know, for that.
Yeah, which gives them, you know, I can't.
But it's not, the taxes are being paid by the landowners
Yeah.
Yeah,
for your real estate, so there's no, that's actually degrading the real estate value in some people's minds.
it does. It does.
So they're complaining about $5 million.
Well, not necessarily, they're negotiating over $5 million.
Yeah, they're negotiating.
I'm not, you know, I'm saying it's kind of good faith, you know, back and forth, you know, on the phone. So I think that, you know, do they want to spend, certainly the counties don't want to spend a bunch of money with the sale and going in and digging more and getting all this information out. Who it is, we don't spend a bunch of deal on lawyer fees, especially when we got something that was verifiable really from a single standpoint that Ben had found on, and now this backs it up with the purchase and sales.
And you're not willing to accept this?
I'm just an advocate for my client, and 20% was kind of where they were firm to, again, as he mentioned, not go further as far as the fees and the court.
It's gonna cost them
Well,
a boatload of
they
money.
still have 15 days or whatever to mull it over and see whatever they need to do.
So I personally think we ought to just accept this and go.
Which one are you talking about?
He's talking about the 29 million.
Yeah, that's the one we recommend to do.
Yeah.
And,
Yeah.
Because we can, again,
And
have
if they wanna-
with a lot of
Yeah.
fees.
Yeah.
On the other hand, I suggest that you reduce the real estate value and then tax them for the easement as a means of recovering the value, the decrease in the value of the real estate.
we can't.
You can't do that.
We can't do that. She can't do it. There's a Supreme Court deal, which I was involved in 2000, that right of ways intangible in one case. We tried to, at that deal, we tried to charge it $3 a foot for intangible right of ways, so.
Didn't work.
No,
Now, is that same Supreme Court?
Yeah, so there's a ruling, so.
Seems to me like the landowner gets hit here.
Well, we're not
He's
here.
got the responsibility of, I can't put a building, I gotta, I can't dig, if I wanna put a line or anything, I gotta go under their line.
Well, that's part of the agreement that they made whenever they signed the right of way. They knew that was gonna be the.
When they updated it.
But it has no really effect on Whiptail as far as theirs. They just have the access to do that.
Well, I'm looking at the loss in revenue from what we had with Williams. You were quoting here, in 21, 73 million, 26 is still 73 million. They've added something in those,
Yeah.
a few years, they've added some pipe.
And if you look at, Chris, if you add up the 176 million and this other 50, it was 200 and something million. And if they had 16 million in Texas, we had 180 million. We had it right at the market value at that time.
Yeah.
So our numbers were coming in with that, but with the sale and the way that the market conditions, and then they wrote the impairment down, so they measured it, and they seen that they had a loss in value, so then that determined.
Well, I can see the loss of value being,
Yeah. Yeah, because
it's a sale.
yeah, and it
That's
depleted.
the market value.
Right, yeah, the southern part, and this is the old Chesapeake system, Access Midstream. I mean, it's transferred from partners and stuff so along the way, so. So I think the 29 million, I think is good, and I think that they'll find Jesus when they go home and take it.
I move we approve his recommendation.
Second.
Moved, seconded, that we approve the 29 million, 21,500.
And I'll have to send Shelley, where's Shelley? Stand up, oh, you are standing. No, I'll have to get you the breakout of that, I'll call this
Okay.
in and then have it emailed to her, and then that way we can sign it, so.
Okay.
I'm gonna text Ally to do that right now.
Have a motion, any discussion? Are you ready for the question?
Question.
All in favor of the motion?
Aye.
Joe? Aye. Levi, aye. Chris, aye. So we're okay. Motion carried. We'll go from there. It was unclear as the original 57,000 was, appeared to be Woods County. Yeah, it appeared to be Woods County, because we had no idea what your total contract
And
was.
somebody broke their hand, but I didn't.
I know, I noticed that the other day.
It works.
It
Most
does,
of
it still works.
Carrie, do we have an adjournment?
So moved.
Second.
Lou, second, all in favor of
What kind of car you guys
adjournment?
What is it?
All in favor, Joe?
Aye.
Levi?
Sheriff.
Yeah, where's the sheriff?
Hey, can you call ahead, in a small, what is it? Crisis.